Welcome to the fourth in the Full FX Disruptor series with LMAX Group, and I'm delighted to be joined by David Mercer, CEO of LMAX Group, in person.
It's great to have you back in London, Colin.
We're putting the band back together again.
Absolutely.
So David, I mean, we're talking Disruptor series. What I wanted to actually switch things around due to the events last week as we're filming, and talk about a market disruption and what happened in stablecoin. What's your take on what happened last week in the crypto world, with the stablecoin blow up?
Yeah, so it's interesting. You and I have been around long enough that, as usual in the crypto world, they think they've reinvented the peg.
Yes.
As we know, pegs break. So go as far back, September 1992. I'm sure you were on the desk.
I was.
Mr. Soros blew up the British government and moved the peg for sterling. And then more recently, so anyone watching, SNB, I remember it vividly, January the 15th, 2015, 9:36 a.m. to the exact minute. It was a scary minute, followed by a quiet 10 minutes there and after, which was the SNB, Euro-Swiss peg, moving. So in a way, we quite like that in traditional markets, in that the peg then, the latest one, Euro-Swiss was pegged at 120. Sure, at certain times, in the immediate after effects, someone showed a silly bid of 0.35. As a market, we didn't handle it that well, but natural supply and demand, it found a level around figure one a few hours later. So yeah, the peg had moved 20%. Now, stable coins in crypto. What are they and why are they necessary? The one in particular talk about UST, which is Terra Luna, is very different to other collateralized stable coins. So this was an algorithmic stablecoin. Now, ultimately, somebody decided to take it on, a la Soros. We're free market libertarians, and I think that's okay. And they drove the price from 1 to 95 to 80, ultimately within 48 hours to 0.
Yeah.
And I think that's okay.
Yeah.
Now,
because it could have gone wrong. I mean, to your point on central bank pegs, Hong Kong has successfully defended a peg countless times over the last 2 decades.
I agree with that. This clearly didn't work. This mechanism didn't work. Otherwise, it would have found a level. And the theory was at the time that if it went below 1, then there was free profit in it. So you'd naturally just buy it back at 95 because you knew you were getting 1 on the other side.
The arbitrage theory, that always works, isn't it?
Correct. So pegs break. But if you look at other stable coins, there are ones out there. USDC, we listed in LMAX Digital. That's Circle. There's an attestation from Grant Thornton that says it's fully backed by US dollars and US T-bills, so liquid dollar assets. So we're quite comfortable listing pairs in USDC. In fact, we merged the books, the Bitcoin dollar book with Bitcoin USDC, because we can always get $1 back for 1 USDC. It's collateralized. There's others out there like Tether. We don't list Tether for various reasons, but let's look at the very start. Why do we need a stable coin? It's because it's quite hard to get fiat into crypto today. So if there was a digital dollar, digital pound, digital yen, and it was cleared within 15 minutes like Bitcoin, 24 hours a day, 7 days a week, I think people would use that. That's initially the purpose of a stable coin. This one, UST, suddenly people were trying to make money out of it. I can't get my head around how you try and make money out of something, 20% return a year out of something that's supposed to be dollar collateral.
I mean, isn't it the case though that any time you see something with a 20% return in a world with interest rates at 1.5% having risen, you've got to ask questions?
I mean, again, we've been around long enough. If it looks too good to be true, it probably is.
Yeah.
And I remember the SNB time, so the few weeks leading up to that, if you like, we had a reasonable crisis because we didn't let our margin customers in LMAX Global load up with positions because, frankly, it's not a particularly good business model for me where I just let you sit long $100 million. I like people to trade. And I remember one of my bigger customers says, but David, it's pegged. The Swiss government have got this covered. They're backing it. And I said, pegs break.
Nothing can go wrong.
And I think that's what happened here. Now, in defense of the crypto community, because I can see a lot of old traditional finance guys like myself, like yourself, maybe criticizing Terra and UST. It wasn't a crazy idea. It was a clever idea, and the people behind it were intelligent. I think at some stage an algorithmic stablecoin might work, just not this one. They should just stop and move on.
Yeah.
But it was worth a try.
Yeah.
In my opinion, it will end up being good for the crypto industry, because we've seen that not everything succeeds, and some things are just too good to be true. And now, over time, like .com, not everything's going to make it.
Yeah, I mean, I guess, so what you're saying is like, we kind of needed an accident to actually put a cold dose of reality into people's life, because there's a whole generation of people out there who've only ever bought Bitcoin and made money.
For sure.
Yeah.
My plumber literally said to me the other day, Bitcoin's too expensive to me. I buy Shiba Inu because I turned 2,000 into 24,000. Well, okay, that's too good to be true. So I said to him, please stop. Please stop, because you don't know what it is.
Funny enough, my local curry house in Sydney, the proprietor of that is into Shiba and stuff like that. He's always telling me how much he's doing. Just stop. What was the impact then on LMAX Digital in terms of like activity while that was going on? I mean, did you sort of get an impact from it, or was it isolated?
We had a great 2 days. I don't know if we should be embarrassed by that or proud of that, but I think what you saw was a flight to quality in the next 2 days. Because look, there's no doubt it was the headlines on all the major news broadcasters. People who I didn't know even understood crypto or ever followed the markets were asking me about Terra and Luna. So there was uncertainty. Bitcoin sold off a bit. The whole crypto industry sold off. And the next day, LMAX Digital printed $3.5 billion that day, which is our biggest day since last June.
Yeah.
Our average for the whole of last year was around 1.5 billion in LMAX Digital. But this year, it's been quiet at the start of the crypto winter. We've been short a yard most days. On the 13th, we did 3.5 billion, and on the 12th, we did 2.5 billion. So that was good. And I think it was mostly institutions being maybe fearful of some of the other more retail-esque platforms out there, some of the other coins. So hopefully, maybe we were gold, maybe we were the Swiss franc on those days.
Yeah, I mean, that's an interesting one, because obviously in FX, which our background is in FX, we spent many years, multiple decades, with primary venues that everybody ran to when the smelly stuff hit the fan. Is this the start of LMAX Digital becoming that sort of venue?
But I'd like to think so. To be clear, the total market cap of crypto today is, depending when you watch this, around $1.5 trillion. It's really small.
Yeah.
Foreign exchange trades $7 trillion every day. The market cap of NASDAQ is 15 trillion. There are $200 trillion of assets in custody today.
Yeah.
So it's a small marketplace. Most of the marketplace is retail. I don't think we're being arrogant, particularly if we say we're the only institutional venue. I mean, in fact, that's why LMAX Digital came into being, because institutional participants who trade foreign exchange with me said, David, can you put something together where I can reduce risk and match with like-minded participants? So I'd like to think we are that senior institutional venue today, but the institutions aren't there yet. My personal belief is that the size of the crypto market can be 10x within 5 years, but that 10x, that growth, will come from institutions, i.e. the banks and their customers.
Is that 10x in real volume at stable rates, or is that partly a lot of the volume growth that we get spruiked is because Bitcoin's trebled in value anyway. So, and
that's fair, by the way, absolutely fair. It's like the best known retail exchange lost a lot of money in Q1. A lot of that's just because they had the same trading volume, but the asset price halved.
Yeah.
If you charge in basis points and the asset price halves, two things have to happen. You double your number of customers, or the amount of trades you do, or you double your prices. Otherwise, you're going to have worse results. No, I think in real terms, to simplify it, let's go back to basics, something I just said. Assets in custody today, $200 trillion.
Yeah.
The value of the gold market is roughly $12 trillion. Today, the value of crypto is about 1.5 trillion. It's been as high as 3 trillion, it's about 1.5 trillion. I think the value of the crypto industry can be the same size as gold. I think that's where it's headed.
Yeah.
So 10x from today at these prices and these valuations.
So that's kind of like you would take that as your benchmark for success of the industry.
For sure.
The closer you get to that. Okay, we're looking at an institutional platform that people seem to have run to when there was a genuine crisis in crypto. Where does this leave you with the market data angle on this side? Because it fascinates me that, there's so much market data out there.
Yeah.
Not all market data is not generated equally. I think we know that and understand that. Where do you see the market data business going in crypto?
That's really interesting in that we are the de facto institutional market today for the cash product.
Yeah.
There's a bigger group in Chicago, are the de facto market for crypto futures. If you are trading that basis, spot future, you need those two prices. In fact, the futures index, that benchmark now includes LMAX digital market data, along with 5 more retail venues. So I think for price discovery, if you are size, if you are institutional, then you need LMAX digital market data. Overall though, crypto market data is even more fragmented than foreign exchange, because a lot of Bitcoin volume is traded against stablecoins like Tether, which may or may not be worth 1. So in fact, the most Bitcoin volume every day is traded against USDT, not to be confused with UST, which is Terra. USDT.
Or USDC.
Correct, which is Circle. Exactly.
Or USD.
Right. Yeah, all of that. So I think in the fiat world, we are clearly the market leader there, but there is arbitrage, there is pricing discrepancy, there is a big credit market out there.
Yep.
So it's very fragmented, and a lot of the retail platforms are built in the cloud.
Yeah.
So what I see though is that the participants you and I know well, not yet the banks, although they're taking my market data, but the high frequency traders, the prop traders, the hedge funds, they are taking my market data and they're pricing other venues that might be in the cloud, but then they know the fast route from Tokyo, AWS, to Singapore, to London, to New York. So mostly the grown-ups, the institutions, are using hardwired data center market data today. So we'll see how that evolves. We've got a good chance of being the primary venue in that space. But then crypto itself is 3 things really. Bitcoin, you and I understand well. It's a currency.
Yeah.
It's for payments.
Yeah.
Ethereum and everything else is a security.
Yeah.
And then you have DeFi, which is a repo market.
Yeah.
Best will in the world, I think they call me a CEX, C-E-X,
Yes.
a centralized exchange, can't really be the venue for price discovery in DeFi land. So I'm interested to see how that plays out.
Has DeFi though been damaged by the events of last week?
For sure.
Yeah.
For
So
sure.
so there's a credibility that DeFi as an industry has to rebuild. So maybe does it put it behind the SEX?
So we, as you know, we've discussed it before, we contribute market data to the PIF network, which is market data for DeFi. They call it hi-fi for DeFi. And it's a new way of aggregating market data and paying for market data. But yes, it's challenged, and it won't be for low latency trading like you see in equities or foreign exchange or even crypto. So I think it's got a ways to go. I actually think DeFi can be great for the world, for individuals and for institutions, but that's probably got a decade of various science experiments to run to see how it works.
If you're talking institutionalizing crypto further, they're going to want to go the low latency route. No matter, even if it's a traditional asset manager pension fund type, they will still want to go the low latency route, won't they? So does that naturally mean that they're always going to be going down one channel? Do we end up with a 2-speed crypto industry, on a scale?
Like foreign exchange, you mean?
Somewhat like foreign exchange. I'm vaguely familiar with the method, the structure.
I think it's possible. The whole idea of DeFi and smart contracts is that you have to be able to value those assets real time. The problem is the smart contracts themselves are software.
Yeah.
So all software has bugs, and a lot of software online can be hacked. So mostly I'd say it's for valuation purposes rather than trading. I can't see at the moment how low latency trading in DeFi is going to work.
Yeah.
But I can entirely see how it can work for Bitcoin, the only currency that I really understand. To put it in context for you, Colin, last year BTC USD was my 8th biggest currency pair.
Yeah.
Eurodollar being number one, obviously.
Yeah.
So that's how I think about Bitcoin.
Yep.
And really how crypto started. Ethereum, ERC20 tokens, for me they look more like an equities market and securities. And the third bit is DeFi, which I think really is for valuation and more the way you want to value your house rather than how you want to value Eurodollar.
But it's interesting, 'cause I mean, obviously I'd look at your volumes in LMAX Digital, and actually Ethereum seemed to be a lot steadier.
Yep.
Is my sense, compared to the Bitcoin. I mean, is that a factor of the fact that it's a slightly different market?
Risk on, risk off. So risk on, risk off. Look, the evangelists may not like this, but today Bitcoin is a risk on, risk off asset. In fact, the price is almost entirely correlated to the NASDAQ.
Yeah.
Now, Ethereum is a utility, right? And it's for other apps to be built on that and the ERC20 token. So a lot of the volumes there are just people because they need Ethereum to move into DeFi, to do something else with it. In my opinion, if you want a proxy for crypto, the first thing you do is buy or sell Bitcoin.
Yeah.
Like perhaps you'd buy or sell the euro, like you'd buy or sell the S&P. There's a crisis going on, what do? You run into those assets. And I think in crypto, you're running to Bitcoin. That's why it's a bit more spiky. But remember, the whole crypto market, that market cap of crypto, is predominantly Bitcoin.
Yeah.
Goldman Sachs produce an index every Friday. And I think last Friday, Bitcoin was 44% of the market cap and Ethereum was 19%. So there in two assets, you've got 2/3 of the total market cap of crypto.
Yeah. I've got to ask you about FX. I mean, there's only so much crypto that an ex-spot trader can handle. Obviously, volatility's back. The general mood seems to be optimistic. How's it been for LMAX Exchange over the last 2-3 months since volatility took a spike?
I think everyone in foreign exchange is licking their lips. Which smart individual would think about setting up an FX exchange over the last decade when interest rates were at all-time lows? Well, okay, that'd be me. Well done, Mercer. So it's great to see that interest rates might be back. I know it's not great for the economy out there, but FX is coming alive again.
I would disagree with that, actually. I think that zero interest rate bound was actually too bad for the economy. And if you get interest rates back to sort of 2%, you actually have, central banks have room for manoeuvre.
Yeah.
Slack can be put in or taken out of the economy, and that does give exchange rates a chance to actually diverge, or interest rates to diverge.
At least they can make a difference, right?
Yeah.
Right now, when you're dealing, we're laughing, anybody who's been on the desk for a while, I think a year or 2 years ago, they cut rates by 10 basis points.
Yeah.
Right? We go back to 1992 again, and we're moving up in percentage points. So I think that's interesting.
7 percentage points at one stage.
There we go. Still didn't work.
No.
But no, I think there's that. Look, some of the volatility, unfortunately, was driven by the invasion in Ukraine, but a lot of that was sporadic. Unfortunately, capital markets, and you know this, through wars, invasions, pandemics, banking crises, they operate. And we're all about efficient markets. And I actually, tipping my hat to every FX professional out there, we actually run an efficient market.
Yeah.
Right? $7 trillion a day tells you that, and it operates through everything. So look, we've seen sporadic volatility right now. When I look at JP Morgan have an index, which is the 7 majors, the mean, their version of the VIX, the mean last year was about 6.4, the mean this year is 8, which doesn't sound crazy, but right now it's around 10.
Yeah.
So I think that's good for every FX trader out there. I think inflation, interest rates, potential cost of living crisis in the economy are normally things that make the FX market pop. So we're well set up. So we'll see whether we've been doing the right thing for the last decade or not very soon.
What I would say though is surely firm liquidity is a benefit, because some of the people I'm talking to are saying, like, actually our algos are actually, as volatility grows, our algos are more interested in firm liquidity than they are.
So that's always a frustration of mine and ours. We do really well when markets are whippy. So we punch above our weight for sure in whippy markets, in crises. Then when things are a bit dull, people go back to seeking out the best price, and it doesn't matter whether it's last look or not. But we'll see. So if we have a prolonged period of volatility, maybe they'll finally realize that actually the certainty of execution you get with firm streamed limit orders is always better than last look liquidity. But again, look, we've talked about this for a decade. It's my job to prove that it's more efficient for the marketplace as a whole, and I look forward to that challenge in the year or two ahead.
Well, I managed to tick my last look box, which is good on everything. Thanks very much for joining us on this Disruptor series with LMAX Group. And I actually get to do this. David, thanks a lot.
Great to see you. Thanks, Colin.
Cheers.